Welcome back. There are exciting signs of a real estate recovery today. The value of high-end properties in capital cities has increased by 0.2% in February, according to CoreLogic, reversing declines on the previous month. And it's a key indicator, some experts argue, of where the broader market is headed. To help us unpack this story, we're joined this afternoon by Thomas McGlynn, CEO of BresicWhitney. Thank you so much for joining us, Thomas.
Thanks for having me.
What's been the recovery in the top end of the market, and why is that a good indicator sometimes of what's happening in a broader sense?
Well, across Sydney and Melbourne, it's been really, really strong, especially the start of the year compared to the back end of last year. And I guess when people are talking about bellwether markets, they're leading indicator markets of what could start to happen across the broader market, you might just say. So the fact that the upper end of the market's performing strongly could be a good sign for everyone else.
So is now a good time to buy or sell? What's the best thing?
I think it's a balanced market at the moment.
Okay.
I think that it's a great time to buy and sell. There's some really good selling opportunities, but equally, if you're a buyer, I think there's some great buying opportunities. So I think it's fairly poised for both ends of the party.
So we saw that first official cut in interest rates by the Reserve Bank, and then the first auctions of that Saturday seemed to be red hot. There were so many people turning out, prices were going over reserve. Do you think that's an indication of the market really heating up?
I think it really gave some, I guess, a bit of a sugar hit with regards to people's appetite to want to push hard and buy at auction. We've seen that temper slightly in recent weeks, so it may not have had the desired effect that many sellers were hoping for. However, we do anticipate there could be another few interest rate drops at the back end of the year, and so I do think it's a great time to buy, and I think if you buy now, you're going to reap the rewards in 2026. So
if we do have another couple of official cuts in the interest rate, in the cash rate, do you think then, if that happens at the end of this year, that then will really fuel prices? Because it becomes a never-ending scenario, doesn't it?
Well, if auction clearance rates remain as high as what they have, and then you add in some extra interest rate cuts, that's definitely going to give a lot more confidence to buyers. And it all comes down to how many properties come onto the market, the old supply and demand thing. But I do believe that if we see a couple of more interest rate cuts, there's going to be some strong energy in the marketplace across Australia. So
if it's the right time to buy now, would you say to sellers, if there are a couple of another rate cuts at the end of this year, that they should hold off to sell?
The flip side of that is, if you hold off to sell, you might get a slightly better price, but you may have to pay more when you're looking to buy. So it's always the catch-22. I think that the marketplace that we're in at the moment is probably the best time to upsize and downsize, because you don't run the risk of the market running away from you, and it ended up being a lot more expensive to buy after you've sold. But I definitely think that people should be looking to try and take advantage of the current conditions.
Thanks so much for your insight this afternoon, Thomas. Much
appreciated.